Hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. 50 pips, rocking and rolling here, 22nd of December, 2022. No trade calls, no recommendations, or response from our own stuff. We're here for educational purpose only. Welcome. Last live stream of the year. I think we should have done 12. Commitment was to do once a month. So I think we delivered, so that was good. So let's see what gives. Hey Rich, how's it going? So as usual, there's no agenda, nothing going on here. Basically, happy to spend some time with whoever wants to watch and happy to take any questions. Nothing's off the table. So any trade you're managing, any trade you're in, any trade you're stalking, any chart you want me to review, anything you want to discuss, don't hesitate to ask. There's no specific time. I can stay on pretty much as long as we have decent questions. We try and keep it, under an hour, just because if not, it takes ages to load on YouTube, etc. But that's pretty much it, right? So don't hesitate to ask if you want to look at anything. Of course, the more questions, the more likely we are to go. If there's no questions, we could just shut it down very quickly, right? In the meantime, what I can do is just talk through a couple of interesting things or where we are at right here, right now, right? So here we have the ES chart up. And basically what we discussed is that we wouldn't be, we were expecting the market to stay in a broad trading range this year. And right now, we're kind of stuck, right? We're going into hey, Stefan, I was wondering if you were going to show up. Not sure what time zone you're in. Basically, so here we're going into holiday chop, right? So really, all things being equal, everybody's year should be done. You don't want to spend the last trading sessions of the year trying to make your year back or get in trouble. So you'll see liquidity thin out. The usual relationships may be out of whack. You could see some funky intra-market correlations, but that's likely just because of the thinner liquidity into the end of the year, right? Now, as I've been trying to, hey, Carl, how's it going? Hey, good stuff, Carl. So what would you expect? As always, we don't know what's going on, but basically we know what tends to happen, what to expect. So all we can do is be prepared, right? So going in, and as I've been discussing on Twitter, right, your base case assumption would be that as we go towards the end of the year, as liquidity will dry up, the market always has a positive drift, right? Over 50% of the time, market is up. So market has that positive drift. And in thinner liquidity, that positive drift is going to be accentuated. So that's what you would expect. You would expect that to continue. You would expect that to be accentuated. And if history is anything to go by, you would expect small caps, so the Russell, to outperform. Okay. Now, a lot of people are going to be talking about the Santa rally. They've been talking about that for the past 3 months. Really, it's like the last 5 trading days of the year and the first 2 days of the next year. But usually it's starting. This is kind of around where it tends to start. So the market wants to believe in Santa. The market is going to look for any excuse to try and rally and hold that traditional way of doing things. So that's what you should be expecting. That doesn't mean it's a lock. That doesn't mean you want to be stubborn. But if the market starts trending and you got those pushes higher on thin liquidity, the best way to blow your account and to have a crappy Christmas is to try and fade that. Equally, if everybody's expecting for the market to go up and we see a little bit of a drift lower and a slow grind of death lower, the best way to ruin Christmas is to fight those kind of flows, because it's not a usual market. You don't have the usual liquidity. You don't have the usual systems trading. You don't have the same kind of dynamics. So you have to keep that in mind. Okay. So here where we are, basically, we've been discussing this range for a while. Basically, top range 4,200, 4,100, bottom range 3,800, 3,700. This was a pre-OPEX low, beautiful little rotation higher. And this, we here, what I mentioned to subscribers at the beginning of the week, I said, in the same way that this was a fade zone for us to stay in range, The 38 to 37 is a fade zone because here we're just stuck inside this area. And right now, especially as long as we hold above the 3900, the path of least resistance is for us to be here, which is fairly neutral inside this range as we go to the back end of the year. So really nothing much has happened, right? If you want to play the longs, you've got much nicer structure on something like YM, because you see here YM is holding the descent, the previous resistance as support. Nice hold of the 50 DMA. It's starting to, the moving averages are moving a little bit nicer. This is a nicer little move. Or again, Russell, if you're looking for that outperformance. But, that's pretty much what's going on here. And this week, we do have still two key potential events. As today, 8:30, we've got final GDP and unemployment claims. And tomorrow, we've got the core PCE, which could move stuff. But bar that, the market is going to continue to want to have a reason to drift higher. So there needs to be something substantial to stop it from doing so, okay? How do you explain ES doing so well despite the doom and gloom? Well, I mean, that's a hard question to answer, because where is the doom and gloom coming from? So first of all, are the doom and gloom people you're referring to worth listening to in the first place? And then the other thing is, why is the ES doing so well? Well, really, is the ES doing so well? We're down like 18, 19% year to date on the year. We're trading below the 200 moving average. It failed to get back above this area. So you could argue it's not doing that well. Do you see what I mean? So again, I'm not trying to cop out, but I would not argue the ES is doing that well, down almost 20% on the year. It's holding heavy. And again, Powell has told you this year's been fairly clear year. If you don't trade your bias, if you listen to what the central bankers are saying, and if you focus the action at key levels, it's actually been a fairly straightforward year to trade. And as long as the Fed is going to be hawkish, you would express, and they've told you, asset prices lower, rates higher, right? So again, I don't think the ES is doing that well. But again, doom and gloom or perma bears or perma bulls, it's not worth your time, right? It's not worth your time. It's just a waste of time. All things being equal, if you have to listen to somebody, you'd probably prefer to listen to a perma bull because the market has that positive drift. But really, life, markets, everything is not black or white. It's different shades of gray. So, just listen to the charts. I mean, ES is still higher than early May. Yeah, but why should it be lower? Do you see what I mean? Stefan, you have to put it in context that if I can give you a piece of advice is don't expect anything from the market. Hey, Luca, the market doesn't have to do anything, right? So instead of saying the market should do this, or I expect the market to be here based on my opinion or based on fundamentals or based on what somebody's saying, just look at what the market is doing and trade the levels and structure your trades around that levels. Your life is going to be much, much easier, right? What do you think about USD CAP? USD CAD. Well, I think here, especially going into the end of the year, I'm not very interested in trading the commodity currencies because they're thinner in general in terms of liquidity and they can get whacked around a lot. But what time frame? Okay, breakout on the monthly, sorry. So on the monthly. Here, USD CAD. So if you go here on the monthly, really this is like the ES to a certain extent, is being stuck in a very broad range, right? For most of it, and then we had that breakout. But really, if you look at it on the monthly, this is still holding this big range, right? So the big question is what to expect. What do you think of it? Right here, personally, I don't think anything of it because it's not the kind of, on a monthly, it's not an area where I have a lot of edge because assuming this is high range, low range, let's see. You see the 50% of this range. Oops, that's not what I wanted to do. The 50% of this range is coming in here. So we're pretty much trading at 50% of these multi-year range. Does that make sense? Right? Since 2015, we're right at the middle of that range. So really, I don't have an awful lot of edge if I think about it that way. And it's kind of stuck in the middle. If you're looking at it on a shorter time frame here, what it looks like is in that range, it looks like it's trying to make a retest of this higher level, but you could also argue that it's failing, but I put that down to it just being stuck inside this range. And chances are trying to read too much into what it's trying to do, how good of a job it's trying to do here into the last 10 trading days or last trading days of the year, very, not ideal. Does that make sense? So this is not really, something I would be focused on. There are other charts which are far clearer and far nicer, I would say, than what CAD is trying to do here. If I had to venture something, it's almost similar to the kind of action you've seen on the bonds, right? Where you've seen this trying to extend higher. And what you see these lows here, I think which is kind of coming in line with this 50-day moving average, right? So here, I think as long as it can hold here, it could try this rotation higher for these highs again. But if it loses this base, similar to what happens on the bonds, you'd expect this to unwind this whole move. And that's pretty much as far as I'd be looking at it. Does that answer your question? Hey, Randy. So the Dow basically here, what's happening on the Dow? Well, basically, again, I don't know what time frame you're looking at, but here, let's just go through a little bit of a review of the Dow. The Dow, if you look at it on a weekly or a higher time frame, you see that you had this very, very heavy movement and it broke up. And as opposed to the ES or the NASDAQ, and again, we talked about this a while ago that, you'd expect Dow, Russell to outperform, and especially with, all this repricing, the NASDAQ stocks had to be repriced, yada, 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 yada. I'm not going to go through the whole discussion, but basically you'd expect the Dow to be much stronger. And you see, as opposed to the others, it is stronger, right? Because it's still holding above that trend line. Does that make sense, Randy? So here, as long as it can hold this breakout, then it's quite constructive. If it breaks below, then you would expect that this is a false break and for it to accelerate very quickly back into those lows. But as long as it's holding this breakout here, right, could be quite constructive. Now, it's messy because it's the end of the year. You can see that this whole area where it's been trying to break out, essentially you've got one candle that just smacked both sides. So the flow is very, very heavy. And that's based on the recent news we're getting, and as long as the Fed is going to continue to stay hawkish, you would expect asset prices lower, rates higher. So this should probably come back down with everything else, but you'd expect it to hold a better bid and you'd expect a lot more steam to come out of tech and so NASDAQ, S&P than the Dow or the Russell. And again, intraday here, it's trying to hold, but the problem here is into the end of the year, anything that happens inside this range, which is essentially inside that previous week candle, really doesn't mean anything. And as we always like to discuss, inside this range, we would say, don't get confused by velocity of move inside range. What matters now, especially after you've seen such an aggressive candle, right? This is giving you kind of like putting a line in the sand. And what that means is, as long as you don't get a weekly close above, which would indicate high odds that we're going to rip up and take out those highs, or as long as you don't get a weekly close below, and that means likely this is a failed pattern and we're going to go back down, it's hard to have a strong view. Does that make sense? Does that answer your question? What is the most interesting chart for you at the moment? What is the most interesting chart for me at the moment? I don't know. I don't have a super interesting chart at the moment, but I know that the commodity currencies aren't particularly interesting to me. US 10-year. Yeah, 10 years. So here, basically, the bonds, after the gift from the gods, basically, from Lagarde last week, right? The only thing you could do on that press conference is basically a green light to sell Bund or sell any, Schatz or whatever you want, right? Basically, Lagarde came out and she said, we're going to raise again. It's obvious we're going to raise 50, 50, 50. So basically she's saying, take some free money, right? And, you don't get a lot of those, but sometimes you get little gifts. And here, what you saw on the Bund, and we talked about this, this is the cleanest trade on that release. And what is it? It's a breakdown at this pivotal level. Does this make sense? Is this familiar to you, Stefan? So you see, this is this previous low that we put in, pivotal level, bam, we break down. And when you see this extremely high odds, especially when it's on a specific factor or news thing, you unwind the whole move. Okay. Now, the big question is, are we going to see the same thing on the US side? And that pivotal level, that's where we are. So UBs, right? That's the pivotal level as you saw on the Bund. Similar kind of action. And now the big question is this the break that's going to unwind? So as long as we hold below the 10-day, that's what could be in the cards. Whether you're looking at UBs, ZBs, ZNs, ZF, similar, right? Similar kind of pattern. So what you want to watch, ZN, ZBs, UBs, is how we react around this pivotal level. As long as we get sellers protecting this, you'd expect this to try and unwind, okay? And that's the pivotal level. And it could get messy here, as we said, into the end of the year. You could see funky relationships. You don't know what kind of flows are going through. All it takes is a slightly bigger order than usual in a very thin market to move things, hit some stops, cause a little bit of panic, and newsletter writers get excited. People on TV get excited. People putting on hedges in a thin market, and then everybody thinks that's a move instead of, you just don't know. So you have to be very, very careful reading too much into the action here. Does that answer your question? Okay. Good questions today. We're getting a little bit more interaction. Good stuff. So what else is interesting? Another thing which a lot of people are going to be arguing about after Lagarde is the Euro chart. Our base case, again, as usual, is, December is most bullish month of the year for Euro. December is a good year, a general weaker month of the year for dollar, and it's a good month to look to be long gold for seasonal trade, especially through the last FOMC meeting of the year. We talk about this every year, and the Euro long, right? And stay long after Lagarde. So here so let's look at Euro and gold in case and see if we get any other question. But basically here, Euro, we were talking about 95, 105. Now, as long as we're below parity, the Euro crowd was still very excited, and they kind of went away after we got back about 1, and now they're not really chirping away anymore. But here, the way I would look at this is to watch the confluence of the 105, which is top end of the range, and the 200 DMA, and you could see all the moving averages are starting to converge here. move higher. And here, as long as this area holds, our base case hasn't changed, is that we're going to see move up back into 110. And so, as long as we don't trade back below that 200 DMA, that's what you would expect. It also makes sense that the Fed is going to have to slow down quicker than the ECB. So you should get a period where, the Fed is getting more neutral and the ECB is still hawkish. So, this is not a bad trade. I don't mind this trade at all. And it's a similar discussion if you're looking at at gold right here. And we talked about this a lot, is really that 1800 is really pivotal here if you look at it on a weekly, right? Basically, you've had this nice little move higher out of this false break lower, setting up the December seasonal trade into January and February. And here you've got this 1800, which is really pivotal, right? So as long as we close above here from a day close, from a week close perspective, the path of least resistance is for a grind higher towards 1900. If we close below, then you don't be surprised if you see some kind of a flush at the 1750. But as long as that holds, this 10-week holds, this could just be a little bit retracement for a move higher. So, right now it's still fairly constructive, right? It's still fairly constructive. Okay. Comments, questions, we're going for 20 minutes. So I'm happy to go as long as we have questions. I'm trying to think if there's anything particularly interesting going on in terms of charts. Something a lot of people tend to be interested in is crude, Litecoin. Yeah, I don't know what to make of Litecoin. What's the symbol? Is it LTC or something like that? LTC. God, how did I know that? LTC USD. I don't look at this stuff often. I mean, what can you say? Yeah. What can you say? I really don't know what to say. I mean, this is just okay, let's try and be professional about this, right? So, big correction back to kind of like an average neutral zone back down here. It's trying to build off these lows. And as long as it can hold this area, you expect it to try and come back up. If it comes back up, it looks like it will have a lot of overhead resistance inside the 120 zone. And if it can break above here, then it could really open up a lot more upside. But if it fails here, then you would expect it to come right back down. And at that point, you would be focused on this kind of trend line here to hold the upside Momo. How's that? Is that okay? Full disclosure, I would not be trading this, but that's just me, okay? So going back to crude, right? What is going on crude? Here, something which I think is interesting, and we discussed this last week for subscribers, once you've got the US government saying they're coming back out, they're going to be buying for the SPR, etc. Essentially, that puts a floor under it. So no matter how good the short looks, you're making things hard for yourself if you're thinking, oh, I want to short this in the 70s because this is going down lower, when they've told you we're going to be buying a bucket load, right? So the only trade really is long, and especially in a thin liquidity, grind higher, risk tends to grind a little bit higher. This is a nice little long, right? And here you can see that also technically that is confirming this, because essentially what's happening, right? We had this big zone, we had a flush, and surprise, surprise, it's a very similar chart across the board. You've got a lot of these false breaks, right? You've got this kind of false break lower, and then look how technical this is. You know, we're coming back in, we pop back above this previous level, we hold the 10-day moving average, we get back above, and what happens the moment we get back above, the switch gets flipped, right? And bam, we're right back into the 80. So here, any dip that can hold here is still a long to play for the grind higher. And especially if this gets above the 80, you know, this is trying to get back inside this range. This is going to be trying to come back into the 90s. So here I would be very careful trying to be short. And especially something I would not want to be is structurally short crude. I would not want to be structurally short euro. I would not want to be structurally short yen, right? All these things have turned, and likely they're going to try to continue to hold that kind of Momo, okay? Any comments, any questions, anything anybody's looking at, anything anybody wants to discuss? Before I forget, to the guys who are in here, if anybody's been thinking about subscribing to the video update service, a little bit of a spoiler alert, but anyways, most probably there are going to be some changes for next year. So with some more stuff, et cetera, et cetera. So come January, price is probably going to get bumped up. So if you're interested in, you probably want to lock in the price pre the end of the year on those. And if you're thinking about the webinars, take all the time you want, because there's going to be absolutely no change there. So can I look at the NASDAQ 30 minutes? Sure. Is there a reason why the 30-minute chart? Am I right to assume you're talking about intraday action today, what to expect today? So let's see, let me find a 30-minute chart. So here we're on a 30-minute chart of the NASDAQ. So really here, I never look at a 30-minute in case you care, but I just think it's a suboptimal time frame. I think if you're looking for a shorter term time frame, the 15-minute makes a lot more sense. It's quicker and has still pretty solid signals. And if you're looking for a little bit more confirmation, the 1 hour is far more solid. Again, the most important thing to keep in mind in trading is that there is no right and no wrong, except if you're looking for crazy flying bat patterns or harmonics. But anyways, that's a joke. There's no right and wrong in trading. It's only whatever works for you. As long as you risk manage your positions properly, it's whatever works for you. Okay. So here, and the other thing to keep in mind is that if there are strong, important levels, they will be apparent no matter what time frame you're looking at. Okay? They'll be, so it's okay. So here, NASDAQ, basically intraday, what would you be looking at on the NASDAQ, and what would you be focused on? Well, basically, you have a situation where we're going nowhere here in the overnight session. So it's really hard to interpret anything here. Now, into the data, what you would expect today is that the market is going to, in thin liquidity, try and do an extremely good job at clipping stops above overnight highs and above, these overnight lows. But really, what matters from a bigger picture now, as we're going towards the back end of the year, really what matters is this is the low we put in on Tuesday, right? And what you're seeing is the market's trying to base here, okay? So as long as any dip that can't take back into that is still going to be fairly constructive, right? And here you can see the market is trying to grind higher. So really, you don't want to see it break back below this area. And as long as it can hold this, then the grind higher will likely try and continue to press. If it breaks below, it might try and test those lows, and likely data could be a defining factor. But, it's kind of hovering there. I mean, if you go back to a 1 hour chart, I think it's a little bit cleaner, but you see a similar kind of action, right? And you see you've got these moving averages coming in line, this previous low coming in line. So that's really the kind of make or break area. Above here, this opens a grind higher into tomorrow's data, and a break lower really needs to hold this 11,250. And if it can hold that doesn't change anything to the bull case. If it closes below and you start seeing your 30-minute 1 hour closes below, then it could get heavy. But that's the way I would be looking at it. Any comments on Japan's central bank rate strategy going forward? Basically here, we discussed this on Monday, and we said that the only trade, the nicest expression of the trade was to have a lottery ticket short into the BOJ on Tuesday, right? And it's a nice trade. I always like having some kind of short exposure USD JPY in December, because it's not uncommon to see funky things happen in December, and they're usually all to the downside on yen. Here, comments on the BOJ. Well, basically, our base case was already that yen had topped, right? And we were looking for this to come back into more neutral territory. And, essentially, it's still holding. Yesterday, the BOJ just accelerated a move, which was, hey, thanks, Randy, which was already in place. So the only thing it did is really accelerate. If I had to make a comment on it, basically it's showing you they're preparing the turn, right? So even though they've moved from 25 to 50, essentially, Kuruda is going to be gone next year. They're slowly preparing the market for the turn. So I think it's interesting in the sense that it's marked as the last big central bank that's turning from free money kind of giveaway. So really, for all intents and purposes, even though this could be funky and you could easily see USD JPY rallying 400 pips on nothing, really what we got out of the BOJ cements this top, and our base case hasn't changed. We expect yen to come back into 120s, but especially if things accelerate, we would expect this to a more neutral level to be around the 115. Okay, so it doesn't really, it just cements moves that were already in play. And again, you would expect that you're going to start to see slowly, not immediately, but more repatriation of, and that's all going to be negative USD JPY. One of the free money trades has been for a lot of people, a lot of systematic traders, a lot of CTAs, a lot of funds to be long USD JPY. A lot of people had already covered that trade, but if you look even at CTA exposure, there's still some significant exposure to those long trades. And slowly, as the days and weeks close, those trades are all going to be coming off because there's no reason to hold those trades. So you would expect to continue to see pressure on USD JPY. So structurally, you have to be long USD JPY or flat. You can't be short. You have to be long yen, so short USD JPY, or neutral, but you can't be long, really. Okay. I hope that answers your question. Thanks, Randy, again. Yeah, again, here, the important thing to keep in mind as always is there's no right and wrong. The only thing that matters is that you have a structured way and a repeatable way of trading or doing whatever you want. And ideally, you find a way to find interesting risk-reward, asymmetric risk-reward opportunities, even though some people like to trade with inverse RR, but it really depends. It's just whatever makes sense to you. The only thing I'm trying to do with these sessions is, giving back to the community. And all I can do is just offer a different perspective and show you how I look at things. Then it's up to you to see if it makes sense to you, if you find it interesting, if it sparks some food for thought or whatever. It's just, they're just comments or observations for somebody who's, been doing this for decades and is paying the bills doing this. So, must be doing something right. So but there's no right or wrong really, right? NVIDIA. NVIDIA. Let's look at NVIDIA. So what's going on NVIDIA? So here, I quite like this stock, but again, I don't trade single stock names. If you look at NVIDIA from a bigger picture perspective, like here it looks fairly ugly and fairly heavy. And keep in mind, Stefan, as we said, all this tech stuff really has to reprice and come down. The question is, has it repriced enough? And, what do you want to be in? If you're looking at this sector, I think clearly NVIDIA is the one I would want to be in. And what you want to watch here is how we behave at, I think this kind of like 150, 160 level is really, really important, because even if you look at it from a bigger picture, you see you had this kind of expansion zone here where we broke higher, and this is really a big break that held, right? And even on the first test here, this area tried to hold, and surprise, surprise, that's what's happening, right? So I think here, especially if you're looking for, if you believe in the stock and you've done your homework on the stock and you like the stock and you want to have a broader exposure, I think anywhere here, what should we call it? We can call it, 140 to 165-ish, something like that. This is a nice build position, kind of, you want to put a position in your retirement portfolio or something like that. This is an interesting level, right? Now, you would expect that, even if the whole sector corrects, you'd expect this to be stronger than the others, really. But so the question is, what are you looking at it for, and what is your time horizon? Because as long as it's trading below that 200, it's still a little bit heavy. If you want to have more confirmation, what you'd really want to see is, you see how this area is being defended and we're back below you really want to see this above the 200, but you want to see a kind of situation where this breaks above, giving enough time for the moving averages to turn. You see the 50s all trying to come above the 100. You want the 10 to come above the 200. And then on the pullback, that's a much nicer long. That's a much stronger long, right? Okay, you're super bearish. Okay, so this would be the bull case, right? If you're super bearish in NVIDIA, well, here you need this to, it's the same analysis, right? You see this line we discussed here? You need to stay above. So if you think this is going to be sub 80 and this is going to die, Stefan, any rally into 170 that holds this area is a gift from the gods for you, not for me, for you, to get short. And you want any rally into this to get sold and then rip. And what would that mean? So the 50 gets back below the 100, the 10-day stays. Do you see what I mean? It's just the opposite, but it's the same thing, right? So in any case, the important thing on NVIDIA here is this area, right? This whole area. And that's where the bulls and the bears are going to have to fight. So the bears need it to stay below, to stay in trend lower, and the bulls need it to come back above. But, I think if you're bearish NVIDIA, I don't know if you're also bearish the sector or not, but I don't like playing single stocks because you could always have something strange happen on the single stock name. But, there are a lot of other ways to express this, either through, the semis, either through some kind of pairs trade against Intel and AMD, or on the NASDAQ, right? But that's the way I would be looking at the chart. Okay. Randy, yeah, hold on. Let me put it in the chat, Randy. Um, tell me if you can see it. I actually own the individual stock. You bought it at 40. That's not a bad buy, right? I mean, I think it's a good stock, but again, I don't trade single stocks that much, and it also depends on what your time frame is, right? And there are a lot of ways to skin a cat, but put it this way, if you're bearish the stock because you've done the work on the stock, that's fine. If you're bearish on the broader sector or the specific sector, I think there are much weaker candidates. There are much better candidates to be short, right? Okay, so any comments, any questions, anything anybody's looking at, anything anybody wants to discuss? Again, I really don't mind. Market is dead, so I don't mind going on. As long as people have questions or want to look at something, I'm more than happy to look at it. USD CHF. Oh, what did I just do? Okay, so USD CHF. So you see here on my market minder, I've got FX. You can see I don't have USD CHF there. So that kind of tells you what I think of it. But, after the SMB fiasco, that's pretty much traded any real trading in any Swissy pair. But what's going on Swissy? Basically, if you look at Swissy from a bigger picture view, you've had a fairly aggressive break, right? And right now, as long as it can't recover this trend line, the risk is for it to come back into the 87s kind of zone. You see what I mean, Stefan? It's really an ugly break. It's really a fairly ugly break. And if you extend this, you see that it's still being capped at the same level. So coming back down on a daily, that's the ugliness of things. So here, in general, you just want to look at, irrespective of what's going to happen with the DXY. Do you see what I mean? I would not want to be long here, but rather than be short this, I'd much rather be long euro. But in any case, even from a bigger picture, as long as it holds this break, then this could be unwinding this whole move. Now, if you go back to the DXY, and this is the way we're looking at this, okay? So the way we're looking at this, and from the weekly update we talked about, is this week is 109, 106, 103. So right here, especially into the end of the year flows, nothing much matters as long as we stay inside this range. Even if it keeps on unwinding, unless it's trading sub that 103, it's still much to do about nothing in my book. And that's the area to watch. If we break below this broader support and this 50 back, then it gets really ugly. But all things being equal, this is a kind of area where you'd expect some kind of a bounce. But that's the way I would be looking at it. What's my focus on trading? Anything where I can get a good trade, good structure. I would say this year I probably traded a lot more indices and bonds than FX. Um, but it really depends on what the market trades. But I don't trade. I mean, we'll look at anything, and in the webinars, anything anybody wants to look at, and in general, to have a good picture of the market, we'll look at everything, single stocks, ETFs, whatever. But me personally, what I actually trade is futures and FX. But I would say, the vast majority this year, a lot of bonds, indices, and less FX than usual, simply because there hasn't been that much movement really. And especially for intraday moves, indices have been much, much nicer. Hey, Stefan, have a great one too, everybody. So what do I think of Meta? So let's look at the chart. Do you have a specific time frame you're looking at? Hey, all the best, Carl. Thanks. Same to you. Look, are you looking at a specific time frame? Here, what's interesting is, you got that nasty gap down on earnings, right? And really, when you see this kind of action, you want to see the market keep the pressure on, right? Remember last earnings, we got this gap down, and look at, you see how the market kept on smashing it on every attempt, right? Every attempt kept the pressure on. Now here you've got a similar kind of gap, and the market is trying to keep the pressure on. But especially if the risk here is that into the end of the year, if you get a little bit of Momo and we take out these highs, is that we see this come all the way back into this 160 range. Okay, that's the risk. So here, essentially, the 120 is really the bull bear line for continuation lower or a rip back into the 160, which could easily happen in thin flows. So again, if you ask me what I feel longer term, which doesn't really matter because the chart's the only thing that matters, is, I would not be betting 5-10 years down the road on Zuck, but that's just me. And to me, Facebook is pretty much only grandparents now spy, or people trying to spy on people and crappy businesses. So trying to hunt for, whatever. So I'm not particularly bullish on that, but I don't know anything. All I can tell you is in terms of the chart, and you can see it here on the weekly, is that this 10-week is trying to hold. And as long as this holds, the path of least resistance is to try and rip back into the 160. And if it can't, then it's super heavy. But especially if the market can correct into the end of the year, maybe you get a nice ramp, but that's probably going to be a nice opportunity to sell everything into next year. Keep in mind that as long as the Fed stays hawkish, as long as we're talking about asset prices lower and yields higher, this is not going to be a favorable environment for tech in general, right? So if you must be long tech, there are probably a lot of other tech names which are far more solid and than Facebook, in my opinion. Okay. Okay, guys. So really good session. Thanks everybody for stopping by. I'd like to wish everybody an awesome holiday season. Have a great one. Remember, don't get stubborn into the end of the year. It's much better to get rested and refreshed and enjoy the holidays and come back strong in January. But again, thank you so much, all the people who stopped by all these live sessions this year, everybody who's liking and sharing and the stuff. Thank you so much. And let's see what happens. And we'll see what we do next year. I'll think about if we're going to keep on doing one free live stream every month, or if there's a better way to doing it. I have to admit that before today, I was thinking of maybe not doing the live streams anymore and just posting some free videos, simply because not many people were showing up and the interaction wasn't that fun. But today we got people showing up. We got a lot of good questions. So if it's like this, the live streams are much funner than posting a video. So let's see what's going on. JPJ, have an awesome one. Thank you so much, everybody. And again, have a great one and see you in 2023. All the best, guys. Take care. Bye-bye.